Hey everyone, this is the Tesla Beat podcast, episode number 30. Sorry about last week. I was actually unavailable, so we skipped a week, but we're happy to be back and to be your resource for the latest news and catch you up on all things that happened. One thing that actually just happened, I think Elon just mentioned that he's at Giga Berlin. I think he was mentioning a little bit about just replacing the whole concrete floors with graffiti, which is pretty cool. But he was with the UK Prime Minister yesterday, so that's kind of hot off the news. One thing that I actually wanted to add this week, I know a lot's been going on, especially in the past 2 weeks, with the earnings being what they were, and then obviously I think there's just been more either macro stuff, but I know that the stock has also taken. Here, let's add this. So we're at 105%, but I would love to just get, I know it dipped to 197, but maybe the answer may be for all of us, but I would love to just do the past 2 weeks I know has been kind of hard as we've seen all this. I mean, Amy, you know this, especially coming out of last year. I mean, that's partially why I think you became more public about who you were and in providing a lot of history. But I know a lot of people have been obviously potentially frustrated, or more importantly, just feeling more of the pressure on the stock price. And I know maybe the people on the call, I know are more like long-term investors, but what are just some of your thoughts and sentiment potentially to talk to people who've just been feeling the pressure and who've been very frustrated about the situation? Anyone can kick it off. No.
Yeah, I would say that the couple of things that you need to look at with investing in any stock. Number one is if it's a volatile stock, look at your time horizon and your risk tolerance is always important. But then beyond that, as you see all these headlines come up, research is really to me the key. So if I see a headline come up about, say, a Panasonic battery deal, and or there is another one that came up about a semiconductor, I researched what they're saying in the article versus what is actually happening with the company. And if there's a disconnect there, then I'm not overly concerned about short-term valuation and price. If it is something that actually has some more basis in fact, like when Elon Musk warned that we could have some type of correction in the economy, and that he's seeing things going on with the companies that makes him think a little bit worried about the future. Now that can still tip either way. It's not a given. Then I pay a little bit more attention and just make sure that I the money I have invested I wouldn't need over that time period where we might have a correction in the economy. And then you always have to ask yourself, would I buy the stock again today? And if you will buy it again today, then you still see a lot of potential upside. If you wouldn't buy it again today, and especially if you're like, would I buy it again today? Because 5 years from now, I think it's going to be a lot better priced than it is right now. And I'm going to wish I had bought it at this price. And I will feel very differently about what this price is 5 years ahead in the future. And that's just kind of the thought process and the methodology I go through. Joe, you've also been investing a long time, and I know you also do have a really good idea of what's going on with the stock at all times. What do you do?
Yeah, I share the same. Like I don't. You really can't listen to the noise. I made a gross error like a few years back where I like listened to the noise and got out and got back in, and it was just like it was a lesson. like Ron Barron, it was like one of those lessons where you just learn like I shouldn't have listened to the noise. You really can't, as long and I say this all the time, like the fundamentals are solid, right? So unless Tesla is doing something where the fundamentals aren't making sense, they're not producing as many cars as they're producing, or you know what I mean, and they're just not knocking it out of the park. I mean, the closest person is like they're pretty much like a 10x from anybody. It's kind of ridiculous, and it's the good and bad of it, right? We want to see Tesla do well, but we also realize that they can't do it alone, and all these other companies that are trying to get in and making excuses just can't do what Tesla's doing. I mean, it sucks, but yeah, you really can't listen to the noise. You just gotta stay the course. I mean, that's for me. I mean, it's not financial advice for anybody else, but I mean, for me, you really can't listen to all the crap and the BS. Just focus on what you want to do and in your investment horizon. If you've got a 5 or 10 year or whatever it may be, just stick to that.
Jeff, did you have any thoughts?
Yeah, I mean, those are great nuggets, both from Amy and Joe. I'll probably pick up on a couple of those, but really, if you go to my Twitter timeline, I spent a lot of time calling out, to Joe's point, just what you see out there. I mean, and I would say 80 to 90% of it is really bad information that's put out in the media, whether it's print media or TV, and you really don't understand the impetus behind some of it at times. And like Amy said, you really got to read and do the research and rely on experts, and really try to understand what's actually happening. I was receiving a lot of calls when, that I think we'll talk about it a bit later, but there's a semiconductor, comment on an earnings call that impacted EV, and I received a lot of calls on that. And what do you think, given your experience in the industry? And it's fascinating because if I didn't have the experience that I had, I wouldn't have been able to actually dissect that issue the way, in a proper way. And Amy did a good job on her timeline as well, dissecting the issue and what could be happening. And it's a very small percentage of people that have those assets or the ability to be able to do that. And so when you have the media out there putting out this information, or it's just information that may have been benign, but it's being interpreted in a way like that, it's difficult for investors. So I understand, kind of how people can be kind of mired in the ups and downs, but you do have to go back to the fundamentals, and you do have to kind of give yourself that test of, is something fundamentally changed? Think through EV adoption, think through where the industry is going, think through Tesla's leadership, think through, the work they're doing, their portfolio, their products, and the direction they're going. And you may not agree with it 100% of the time, all the time, but you kind of have to look like on the large, kind of on the whole, is it moving in the right direction? The other thing is just about equity markets. Equity markets aren't linear in nature. There's emotions involved. There's mechanics involved in equity markets in terms of how they're managed. So it's not just going to go up and to the right, all the time. That's just not how equity markets work. So you've got to have that patience and kind of you have to understand your time horizon. So we'll see. I mean, there's been a lot going on. I would say in the last couple of weeks, macros kind of put us a bit on a roller coaster, I would say. And the earnings announcements, to me, and we'll get into this in a bit, but in macro auto, I think the earnings announcements are quite bullish for Tesla. Even though there's takeaways from the Tesla earnings call itself of like the mood or the tenor. But if you look at kind of the macro auto, and kind of take those earnings calls and modulate them together, I think they're very bullish for Tesla. We'll talk more about that.
Yeah, I think all three of you, man, it's good to be back. Feels like last week. It's always good to have everyone's perspective. But yeah, no, I know a lot of people have just definitely been feeling the pressure. I know partially because of these macro times. The one thing I've seen is that, I know during like big downturns, like when people have the capital and they invest it, my observation has been that, people can end up doing really well. Obviously, you can also do the opposite. But if you do the research on the fundamentals of the company and what you're getting into, it can be a lot of upside. And that actually would lead me potentially into a clip that I wanted to show from Ron Barron. It was about a 2.5 minute clip, but I cut it down to the last minute and like 5 seconds. But he actually, I believe he invested about 400 million over 2 or 3 years, and to a peak of he made a peak of 5.5 billion in profit. But he's also saying potentially there's that upside over the next 5 to 10 years. And so I think that can also just, help with some perspective. So let's just play that clip real quick.
Over the past, since 1992. So basically, we invested because I thought there was a big upside. I thought he was a brilliant guy. I still think that. We continue to work on our research in this company all the time. Virtually every week, we're talking to someone there. I was out in Palo Alto a week ago, and I was there for an afternoon, and I met with 2 executives who were the people who were in charge of autonomous driving and also in charge of compute, of what NVIDIA does, the chips. So what we're always doing, we're trying to understand how a business operates and what's special about it and why other people can't do the same thing. And in the case of Tesla, we are convinced that people cannot do what they're doing, and that ultimately it's not just going to be a car company, it's not just going to be a battery company, but ultimately all the other car companies, which 50 years ago elected to become much more profitable and outsource supplies and compute to other people, we're going to be like Intel was inside of computers. This is going to be Tesla inside of cars. All the cars are going to be using Tesla autonomous driving. No one else can possibly compete.
Of course, you haven't just.
Yeah, I mean, I think Ron, obviously take it from a man who has literally made billions off of this for his clients. He, again, it sounds like is really invested in, what is this company doing? He's meeting with them. He was just talking with the autopilot team. But it's one of those things with like, how is this business running? What's their competitive advantage? Is this something that other companies can do? And so he's clearly very tuned into that. So I thought that was hopefully that's helpful to some of you that have maybe been feeling a little bit of the pressure in recent weeks. But yeah, I thought we would level set with that, as I know it's just been a big concern. And even as I know specifically in the timelines of Amy and Jeff, they've been really fighting the FUD this past week or two. So make sure you are following them. They're either tagged in the description or on X in the actual post. So all right, well, let's get into it, into some of the news. Obviously, I think, we'll keep showing this, but this stuff is just top of mind. Cybertruck is coming literally in 27 days. There was a video of I think it's the bottom right, the truck doing the crab walk, which was pretty cool. I actually had a member send me the bottom left one with the Cybertruck and a hand sticking out as kind of a joke for Halloween. And then we had another photo in the top left. So, this is the month of Cybertruck. It's crazy. It's been literally 4 years since, I even went to the launch and saw it, since the world even saw it. So it's just like crazy how just time can just kind of fly by. So, and the one thing I did want to say is I think a lot of people got, sorry, Jeff, were you going to say something? Oh, okay. I was maybe misread that, but either way, you probably got an email about your having to go into your account not being verified anymore or something. All I had to do was just go in, delete the connection, and say where you essentially link it up to Plaid. You delete that and then add it back, and then go back into your Tesla account, into your profile, and you can add it back and get re-verified for the event. So make sure you do that. I don't think it's completely required. They're willing to even verify you a little bit, even if you get a ticket. But make sure you go and re-verify that. So, but I think also too, some of the other stuff kind of going on, I may pass this to you, Jeff, just to potentially even like level set a little bit about what's been going on with the UAW. Again, this is Tesla related in that it's really the auto industry is just being hit with these huge demands from the UAW. I know that I think it's a couple of them have settled and come to the table. But I thought this was an interesting quote. News from Sawyer: the UAW president is confident he can take on Tesla and its anti-union CEO Elon Musk. We can beat anybody. It's gonna come down to the people that work for him deciding if they want their fair share or if they want to fly himself to outer space at their expense. I believe it's doable. But maybe I'll pass it to Jeff if you have any thoughts on this comment, or more importantly, just even a quick update to the audience on what's been going on with the strikes.
Yeah, I mean, they settled, in terms in the last week or so, all the big three, and I think they were a bit surprised and taken aback about the ability for the UAW to make as much progress as they did. And there's some of the estimates are starting to come out in terms of the impact. I think Ford's calling out $1 billion, or somewhere in the order of in a range of like $500 or $600 to up to almost $1,000 per vehicle in incremental cost, as a result of this. And again, we've talked about this before. No one on the show is anti-labor or people getting higher wages and doing better for themselves. The question is for the UAW, for them to thrive, they've been losing membership over the decades, and for them to thrive and grow, they're going to have to add net membership. So that's why one of the most important things with the legacy deal was for them to get the battery manufacturing piece of it as part of the deal, and that was a big win for them. So now that logically, this sets their sights for the non-union auto companies, and everybody, the media loves to put Tesla in those titles, but it's obviously Toyota, Honda, and so forth are very big opportunities that they're probably looking at. And yeah, they're probably, I have sources saying that they're definitely going to make an effort, for Tesla in Fremont. Remember, Tesla has multiple manufacturing sites, and in some of those states, they're right to work states, and there's not going to be the opportunity for them to unionize, but there are sites where there may be the opportunity to unionize. So they have the UAW has a lot of confidence coming off of what they just did. So I would fully expect him to make that statement in the media and the press. I wouldn't expect him to say anything different regarding that, but I would just say that Tesla is a different company. Elon Musk is a different CEO than what he was dealing with prior. And I would say the lineage of this workforce and kind of what's ahead for this company and the way that they compensate their employees is in a much different way than how they're compensated at legacy auto companies. So you have the ability to have outsized growth as an employee, as the company has outsized growth. And with normal profit sharing plans, that's just not the case at some of these other companies with Tesla's equity offering. So we'll see how it plays out. I think it's going to be interesting, but this is a different landscape for this UAW president to step into, and it won't. I don't envision it going the same way as it did this last go around. But let's not let's not undersell anyone. Let's see how this plays out. It should be interesting to watch. The other thing to keep in mind with Tesla, and I'll hand it over, is if you look at the job openings, and Alexander's done a good job of posting this on X, they're posting second and overnight shift openings for work on robotics and work on autonomy. So Tesla is really kicking, and that's a great thing, by the way. Not only does that accelerate progress, basically working around the clock to test these solutions and develop and test these solutions, but it's also a much better use of capital to use it across a larger time span versus just kind of like, they don't work in shifts, but kind of like coming in the morning and leaving later in the night. These, they're going to continue using the capital through the night. So the point there is Tesla's kind of have a longer term view on labor and how to expand labor. It's very different from the UAW's view. So I think that's the broader backdrop on this whole thing.
Yeah. I think that's all really good points. And I am a union employee. I give a percentage of my paycheck every single time to the union. So for employees, when they are not union, to go in and unionize, they have to think that the benefits they get are going to far outweigh all the drama associated with the whole union thing, because now you're pitting employees against each other. You'll have some employees that are for it. You'll have some employees that are against. You're going to come into work and people are going to be all worked up and they're going to be upset about it. Whereas right now, when people go into work at Tesla, they're all very focused on the mission. Elon Musk they encourage them to play work in the to play music in the factory. You know, they come into this awesome environment where they're happy, where they know they're making a difference for the world, and they're mission focused, and they are compensated very well, and they're given a huge chunk of potential on the upside by having stock options, which is just not a typical union thing. That it doesn't make a lot of sense for Tesla to be able to do this. They have good work. The other reasons why you would unionize, trying to get better hours for work. They already have great hours for work, you know, to try and get more potential upside. They already have that. And they have a lot of competition for the jobs. And they know there's a lot of people on the street that want to come in and work for Tesla. And they feel very fortunate and lucky to have this job. It's not something where they think that they could easily walk out and replace it at another company and have a job that they like as much as the one that they already have.
Yeah, I think that's a good point. Also, the fact that Sean Fang bases his argument on greedy companies and the, you know what I mean, the fat bellies of like some of the OEMs, whereas like Amy just said, like Tesla is a very give back company. These people get 3 days off a week. They, you know what I mean, they're compensated very well. Everybody I know who works there makes more than most other people in other facets, and also the stock options. You know what I mean? Like I just don't know anybody who would give that up to pay dues on union fees. Like I don't know. It'd be different if Tesla was one of those companies that's trying to, I mean, like Sean Fang says, like just spend all their money, go into space and do all this stuff. I mean, that's not even like the two separate companies. Like for him to even say that just shows the ignorance of like that he doesn't understand how this works and how
gaslighting.
Yeah, well, it's a lot of gaslighting too. Yeah, but one thing I've noticed over the years, if you think that you know better than Elon, 9 times out of 10 you're wrong. And I mean, and that's just a sad state to be in, to think that you know better than this man who is clearly doing a lot of things more right than wrong. It's just like that is wild.
Yeah, a couple things to piggyback off of what everyone said is, you know, I think even when Elon, you know, obviously Elon, I think he won a case recently too. Well, he's been winning. They've been winning. Tesla, I'll put it. Tesla and Elon have been winning a lot of cases in their favor, which has been good. But specifically his compensation. So he doesn't actually get a salary. He's got this insane stock option, you know, compensation plan that was made. I don't remember how, like what, 10 years ago. And everyone that saw the compensation plan at the time was like, that's like not your favorite, Elon. Like, why would you do that? And then obviously now once he starts hitting these like insane targets, the company starts going 10x to, you know, becoming the most valuable auto company on the planet, with all the auto companies combined. You know, he starts hitting those accelerators, and then that's where he eventually becomes the richest man in the world, obviously with, you know, his other companies doing as well. But, you know, he really actually doesn't make a salary. So I think that's another thing that people need to know. And then also too, is that, you know, a lot of the workers, especially on the production line, that would potentially even be unionized, you know, a lot of them, especially like I've had a lot of service techs and other like mobile service technicians come to my house, and they've all said that, you know, what makes the package amazing with Tesla is the shares that they get. It's not going to be the base salary, especially living, you know, Tesla's building cars in Fremont, which is probably the most expensive place on the planet to build cars. And it's one of those things where he, you know, all these technicians and others are making money, and making a decent salary. I even met one guy who's actually a millionaire now because he's been at the company 8 years and the stock has done well, because every employee, whether you're like a janitor all the way to, you know, we've actually met one, Joe, you might even remember him. He won one of the Tesla Takeover Awards 2 years ago. But either way, he literally like was janitor, worked his way up. But it's the stock compensation that really helps, especially if you're around 5 to 7 years, and if you believe some of the stuff Ron Barron's saying. And that's something that the union cannot match. And I know Tesla has put out some information about how they compare, or how their workers are paid, especially out of Nevada, because Nevada doesn't even have any executives really on the payroll there. And so I know I don't know exactly the multiplier, but I know that if you're a Tesla employee versus union worker, at least based on the metrics I've seen that it's in favor, and by a decent amount, to Tesla. So I think it's not going to be easy. It's easy to just throw Elon's name into anti-union Elon Musk company or something just to get a headline. But I think that's just a big call out, is that it's not going to be able to unionize. And I think that, at least the way I've seen it, is Tesla's not going to want any of the noise, right? Especially once you start bringing in the noise of making the employees decide on what's a part of the union they are. It's just, that's going to cause a ton of friction even internally with Tesla, because I think they're a no nonsense company. They're here to get the work done. They want people that are passionate about what they're doing to move forward. And if you're not really a part of that, unfortunately, you'll probably be pushed to the side, and they're just going to keep marching forward. So at least that's kind of what I've noticed about the company. Some other things, I don't know. I'm not going to spend too much time. Actually, I want to get into the EV adoption FUD, but I thought a really cool stat. I believe here. Let me just put this bad boy up. Yeah, Sawyer put out this thing. I thought this was just a helpful stat. BYD is kind of seen as the next big volume player in the EV market. But I thought you could see this was a helpful just clip real quick on the profit per vehicle sold, BYD versus Tesla. Obviously, we know Tesla has been cutting their prices, but this is just something to kind of I think just mental note. But let's get into the EV adoption. So thankfully, it's always fun when we can use one of our slides as from one of the people who actually is a host on the Tesla Beat. So Jeff put out a tweet a couple days ago, and he says, EV adoption, it's actually dishonest to claim that there is an adoption issue in the US when Tesla is turning 10x higher volumes of EVs with 15 days of inventory, and legacy auto EVs are at 100 days of inventory with 1/10 of the volume in equivalent geographies and macro conditions. Maybe take a look at the value / dollar issue with legacy EV when their equivalent models are priced upwards of 15 to 50% higher than Tesla. But yeah, Jeff, I'll because obviously this was your tweet. I'll pass you the baton to kind of, why did you put this out? What have you been hearing? And has this type of FUD been some stuff you've heard historically, or is this stuff that has kind of been new that you've been seeing, or just people have just been making up new things this past week or two?
I mean, I think for years there's there off and on this has come up, but actually it hasn't come up a lot. And the reason it hadn't come up a lot in prior years is there was a tone of the competition is coming, and therefore this adoption curve is going to keep growing, and the competition's going to chomp into it. And literally within minutes of the competition literally capitulating in their earnings reports, in print media, in their capital investments, they all have their board meetings, prior, to their earnings announcements. And, they made very big decisions regarding their capital and EVs right before their earnings announcements. And then they stated their earnings and, what they're going to do with EV and their earnings announcements. And literally on the heels of that happening, all of a sudden hybrids are now the greatest thing, and people don't want to buy EVs. And if you look at the ad spend of these companies like a Ford and GM, they literally spend billions of dollars on ad spend, both in print and television media. And guess what? The chorus started singing that, well, maybe people don't want EVs, and maybe there's this slowdown. and it's in the Washington Post. It's everywhere. And guess what? They have access to all that media, and they have PR teams that go and work and put those talking points out in front of them. And guess what? People say that there's a wall between, these editorial rooms. I don't know. I mean, it's pretty interesting that the narrative was the competition is coming. As soon as the competition said, we can't build these things, profitably, and all of a sudden people don't want EVs. Now, if you look at the data, this is where you have to go this is back to Amy's point of like, you have to go and research the data. And the data says that as Tesla was moving their pricing down, equivalent models that were competing with, for example, a Model Y, all of a sudden became far less competitive. And really, they never were competitive at their point of launch. Like the Cadillac Lyriq starting at $68,000, under range, under spec. And you have the opportunity to get a $48,000 Model Y with more range and more performance. That's what happens to these vehicles. And now a flywheel has started. The flywheel is they weren't putting their volume production behind these vehicles anyway, and the inventory was growing. And now they're not going to put the capital spend to add the capacity they need, both for them and their suppliers. By the way, when you're an auto supplier, you are also investing in not only the capital in your factory, but you're working with your supply base on their capital needs as well. You could put it in the piece part cost, or it could be a separate capital expenditure. But if they're doing a custom component for you, you're working on capital for them. So when you send that message that you're cutting your capex, you're also sending a message to your unique EV supply base as well. You're really putting them in a lurch. So the distinction I wanted to draw around the inventory is that Tesla has this industry-leading inventory, and they're moving at 15 days of inventory. And by the way, they said almost half of that is in transit. It's not really an excuse. I mean, that's the physics of their inventory, which means there's only about 8 days or so of it available for sale. And now contrast that to a dealer-only network of basically 100 days of product available for sale. And the trend is the most important thing. They started the year at 40 and they ramped up to 100. So what happens is the pricing piece of it killed them. Their own product is killing them. When customers are at dealers and they have a choice of an F-150 gas-powered, hybrid, or electric, the dealer themselves know that they can make more money selling the gas-powered or the hybrid, and they're pushing the consumer towards that. And the other thing is the fact that the dealer network doesn't not know how to sell EVs properly. A lot of these are coming back. So that's what's actually happening. They don't have they don't have the unit economics to produce profitably below $50,000. And Tesla's crushing it there. And that's the fundamental problem. So they're pushing out models, they're pushing out CapEx, and this is a big issue, and this is causing ripple effects in the supply industry, and we'll talk a little bit more about that.
Yeah, no, I think you made some really amazing points. I at least to echo pretty much everything you said. I mean, the business model, the product, the pricing. I mean, these legacy auto companies are their own worst enemies, and that's being reflected now. And as you said, with these dealers, who knows? They're probably not even going to be buying that many EVs, especially if they're sitting on a lot of inventory, because they're losing money every day. It's sitting on their lot. But also too, if they're, if I'm a sales rep, which, a lot of them can be based off of commission, right? And just hitting certain numbers, they're going to push the thing that is going to sell quicker and easier. Because again, a lot of these guys maybe have, unless they're brand new, 20, 30 years of experience doing sales. And they probably don't know about, the Electrify Charging Network, Electrify America Charging Network, or some of these other networks. They probably don't even know that Ford's transitioning to NACS for their charging standard. But who knows? Maybe they do. But either way, these companies are really set up. They've And I think they're realizing that. That's I think the thing. I think this has been like a huge moment, especially now. And I think, you look back to the shareholder day, where Elon was saying, don't look at, the stock for like the next 12 months. Like, we're going to come out stronger in 12 months than any of our, friends over across the street. Because, that's what you're starting to see now. Like, these companies don't have the capital because it's not profitable. Their products are, subpar. And the business model itself is just so backwards with, the way the dealership model is set up and the way that these companies are structured. So it's just going to be one of those things where it's like 2 steps forward, 1 step back. I mean, especially if you look at, what's happened with Ford, they announced the Ford NACS standard and all that, taking a couple, and they've probably been the most forward-thinking company out of all the legacy auto companies. But then now it's like the UAW steps up and says, hey, we want 40% more, 20% less work. Obviously, I think it worked to like 25% increase in some other stuff. But all that to say is that, it's one of those things where, Tesla doesn't have all this baggage from their old business model. It's one of those things where they can start fresh. But this legacy auto is trying to ramp into what literally is going to be the future, and they can't. And I think that even when I think back to like what Ron Barron is saying, full self-driving and even the software, it's all going to be Tesla. Charging is all going to be Tesla. I mean, BP just, spent $100 million to invest in Tesla superchargers. So it's just it's almost like these companies literally can't move forward, even though they want to. Like a Ford, let's say, maybe the other companies don't. But yeah, it's going to be a pretty nasty 5 to 10 years, but it's going to be one of those things where these companies are just going to be kind of like how they are now. It says Ford on the front, but there's like 500 companies making the car. And at some point, Tesla's going to weave itself into the build of the car, which is probably going to be the software, maybe even other things.
Yeah. And a couple of things to quickly add.
Yep.
The more they know right now that with their current designs, the more that they actually build, the more money that they're actually going to lose. And I was even calculating, it's not linear, obviously, but Ford, they're building like between 20 and 30,000 EVs per quarter. Ford did ramp that up to something closer to 80 to 100K, which they said they were going to be at 150K in 2 months from now, quarterly run rate. If they did ramp it up, they would have taken all the EBIT margin out of their other businesses and brought it to zero. They basically would have made no money. So just that small ramp up in EV to their even below their prior targets would have wiped out all their margin in the business. And this is a dangerous flywheel for them. And Gary asked me the other night, he goes, why do you think they're not just discounting these cars and moving them? And I had an answer. The answer is there's nothing for them to jump to. Normally you do discounting if you've got a better thing coming right behind it, and that you can move your dealers to, you can move your product to. There's nothing behind it for them to jump through. So why would they actually discount the inventory dramatically to move it? They're just going to accelerate their losses further because they have no new product behind it. And now lumping the capital decision on top of that really is delaying out the next product coming even further. So this product is basically going to sit in inventory, I believe, at fairly high prices. They may do some end of quarter discounting here and there, but in general, I don't think that there's going to be some mad fire sale to move this out because they have nothing else to actually jump to.
And one quick point to take off of what both Jeff and John have brought up. BYD is, when you look at it, one of the most successful EV manufacturers other than Tesla. But we had gotten a statistic a while back where the CEO of BYD and founder talked about how inefficient his factories were, that it takes them many times more workers than Tesla to produce that number of cars. And you could see that in their financials when you looked at like their free cash flow statistic. So their free cash flow is going down the more cars that they produce because it costs them much more to produce every car, which just goes to show you again the advantage that Tesla has in the efficiency of the way that they run their factories and the efficiency of the design for manufacturing process, having the design team, the manufacturing team, and the engineers in the room, even having the data going all the way from the supply chain all the way through the cars coming back in for service, and changing the way that the car is produced to have the cars break less and come back in for service. Whereas if you look at legacy auto and even, other companies, parts is a large part, the profitable part of their business. Whereas Tesla would prefer not to have their cars break and have their cars be reliable and have their cars not come back in for service, because where Tesla sees a big portion of the future profit coming from is autonomous vehicles. All these cars are already shipped with the hardware, and robotaxis. So Tesla is designing from just a whole different mindset from the beginning and operating in this ultra efficient way. And they just keep improving. So the bar that other manufacturers are trying to meet, it just gets harder and harder to meet because Tesla is not standing still.
Very good point.
Yeah, one thing sorry, Joe, were you gonna say something? Okay, one of the things that I was interesting, and I want to get onto the Panasonic thing, pass it to Amy. So we'll probably. But one thing I want to say, it's kind of like when you look at Nintendo as being like a gaming console, and I think Jeff, you I think you would maybe know a lot about this as well. But either way, Nintendo is one of probably the most profitable, if not the most profitable gaming company, and it's really they're selling a decent product, if not. It's not comparable really to the PS5 or the Xbox, but what is making it so profitable? It's the software, it's the games, it's the IP on all of these things. And that's what makes it the long tail, the lifetime value of the product so amazing and so profitable, is because you don't just buy the Nintendo Switch. I mean, when I bought the Nintendo Switch for my kids, I had to buy Super Smash, I had to buy Mario Kart, and then we played Zelda. You buy all of the games that have been around 30, 40, 50 years. But that's what makes the product profitable. So you can lose on that and then you gain it back later. And that's ultimately the business model that Tesla's setting up, is that they're going to have the full self-driving. They're going to have potentially the robotaxi. Maybe they even have an app store further down. I mean, there's already, Steam's already integrated into the S and X. So there's a lot that they can do long term. They can sell the acceleration boost. There's other potentially features, that they may go down and start selling on the side as well. I know right now it's just the acceleration boost and the full self-driving software, but it's starting as a hardware company or starting selling the car, and then it's the additional things that make it even more profitable versus being, hey, let's make a crappy product so that you keep bringing it in every 2 months so that we can make money off of service and parts, as Amy was saying. I'm going to highlight this and then we'll jump back. So Subaru, as we all know, they announced the NACS. So good to see them finally jump on, a little late to the party, but I guess, any way to get some headlines is good. But yeah, let's get back into, I know I thought it's been 2 weeks since we've kind of been on, but I thought, there's just been a lot going on with the stock and FUD. And so, what better way to, kind of just level set with everyone than talking about some of the big things that are top of mind. So, Amy, I don't know if you can just open us up, like maybe what have you been seeing the news kind of saying about Panasonic and the FUD there, and then obviously your response to a lot of that FUD.
Yeah. So with Panasonic's earnings call, they guided to lower than expected profits because of lower. They're seeing softening in demand for domestic production of their batteries. Now, it's important to remember that Panasonic is not a U.S. company, even though they have the battery manufacturer in Giga, Nevada. So when they say domestic production, they're talking about in Japan. And we know that Japan far lags many other countries when it comes to EVs. A lot of this led by Toyota and their other manufacturers. Toyota is just really not doing anything with EVs yet, and they're trying to do more with fuel cells and hydrogen, and saying maybe they'll get a solid state battery, but it's just a couple percentage of their sales in autos in Japan are actually pure EVs. So of course they're softening in the Japan market because they thought that would be ramping up that's not ramping up. They do produce some batteries for Tesla out of Japan, and that's for the S and X. And if you look at that, Jeff has done a lot of talking about when you see these things come out, you got to actually put it into context. So if you look at Tesla, what percentage of actual production is the S and X? And it's just a few percentage points of Tesla's volume capacity and production. So if it's just a few percentage points, and it's not like Panasonic said, we're going to get provide zero batteries to Tesla for the S and X. That's not what they said at all. They said we have a softening in demand in our domestic market. So we don't know that any of that is coming from Tesla saying that we don't want the contracted batteries for S and X. And even if there was a Tesla saying we don't think we're going to ramp at the same rate on the S and X, that's really not material to the types of profits that Tesla is going to be able to make. So it's just the short sellers will pitch a story to different reporters, and it will sound good to the reporter, and it sounds relevant, and there's a couple kernels of truth to it. But then when you put it into context and you really dig down to what's happening in there and do some research, the actual picture and the impact of it is way different than what the headline said. So like my tweet said, just always read past the headline. You know?
It's a great point. They even said the Model Y cells are strong. That's the meat of Tesla's business. So it's amazing when the lack of context on some of these things is astounding. But it's when you understand their purpose or you understand their objectives, it's like, okay, so this is why their interpretation is important.
Yeah, I think I think when you break it down, especially when you know the ins and outs, like of what type of batteries they're providing to the S and X lineup, and we also know, it's not, I think they've done like 20 to 30,000 S and X per quarter or something like that. It's not their growth business. The Model Y is the best selling car in the world right now. And they're, at some point they'll even release a newer version in the US for the 3 and the Y, which will get more people to step up to buy this. But yeah, it's just one of those things. Do your research, but also it's great to have resources. Excuse me. It's great to have resources in the community like Amy, Jeff, even Joe, just to like put out the right news and who know the ins and outs. I think that's the one of the biggest reasons why I became such a fan was, the media is putting out fake news. And then you realize, no, I drive the car. That's not true. That's not true. That's not true. But yeah, so I think, so Amy, thanks for that. One of the other things that I think, as you continue to hear the Tesla is just a car company narrative, they put out this tweet, and Drew Baglino is one of the executives over at Tesla, and Tesla Energy put out a tweet. In Puerto Rico, 75,000 Powerwalls can now get paid to support the grid in what could be the largest virtual power plant ever. And I think, I forgot if it was Sawyer or someone else, they said that you could potentially get paid $1 per kilowatt that you essentially send back to the grid during this time. And then Drew said, excited to be working alongside with our partners, Sunrun and Sunovana Energy and Powerwall customers to make this the biggest virtual power plant in the world and rapidly reduce the frequency and duration of grid outages in Puerto Rico. But yeah, I think this is going to be huge, especially for countries like Puerto Rico who can be hit by natural disasters. If there's batteries and things like that can support the grid during mass potentially outages or tragedies, which I know has happened and rippled through like the Caribbean and even Central America. So it's just it's really cool to see, and it's another big point that Tesla is not just a car company. They're now becoming one of the most one of the biggest energy companies.
Yeah, I think that's really well said. And it really is. Oh, I have a dog here. It's really a whole different area of disruption than than people have been talking about. We've been talking about energy storage, and that's interrupting some of the power plant generation. But this is actually Tesla becoming an energy distributor, an energy company, by being able to do these virtual power plants. They also have trials of this going on in Australia as well. So it's something that they're trying out in various places. They can do it with both the power walls and with the mega packs, and it's a very exciting opportunity. It also, from the mission, accelerates moving the entire grid to a sustainable energy future quicker. If you can take all these distributed resources and use them to fill in some of the stop gaps that are going to be existing in the grid, like you mentioned, John.
Awesome. Yeah, no, I would totally agree with that. I mean, at least for myself, like I have the virtual power plant in my house. PG&E gets shut off 10 times a year. And the more I tell neighbors, especially on my block, about it, it's a no-brainer. It just becomes an affordability thing at that point. One other thing a couple things that we wanted to quickly call out was the CNCDA put out some stats. On the right, you have the California's best year-to-date sales, 103,000 for the Model Y, 67,000 for the Model 3. But if you look at the number 3 and 4, which is Toyota, again, they're not even full electric vehicles, first off. But really just the exponential amount that Tesla's putting out, especially in the Y and some of the other ones, is just pretty insane. And then we also have a ranking as well on the bottom right. And then we have on the left, it's the market share that we have. And again, some of these are skewed. Some of these stats are skewed because, again, you can have hybrids included in this. I mean, a Jeep Wrangler's included in some of these stats, which is pretty crazy to think about. So those are some, I think, high-level stats. And then let me see. I think there was. Oh yeah. We'll close with these two things. So hopefully, inverse Kramer happens. I was shocked. I think Jim Cramer just needs to shut his mouth when it comes to Elon Musk. But he literally said, I wonder whether this man can sell even 50,000 of the 200,000 Cybertrucks. Jim, yeah, you are wrong on this case. So hopefully, we'll see this, but Elon responded, "This is a good omen. Or inverse for Kramer never fails."
Yeah, he also said that the Maverick had more tow capacity than the Cybertruck. Yeah, he's wild.
He was reading. I love the clip that you share here because it actually shows him looking down and reading at handwritten talking points. And it sounds like they came, directly, like he'd worked or collaborated with somebody. I don't know, but it's really strange. And he's talking about the Cybertruck specs, and none of them have been released. None of them no leaks have been confirmed. And to speak to it like it's authoritative, like, yeah, it's going to cost this much. It has this much capacity. I mean, it's really disappointing, actually. And I took to my Twitter timeline right away to kind of call it out, and others have as well. And I think it's great because we have to keep doing it. It's just really, honestly, just misinforming the public, and it's not helping people. So anyway, I was shocked, and I love that Elon. I think he invented inverse Kramer back from
That's what
the
I was
IPO
say.
days.
This was with the IPO announcement, and Elon Musk was like, "Well, you kind of get everything wrong, So you don't think Tesla's going to do well? I think that's a good omen, And so we get to thank him for inverse Kramer as well as many other memes that he's come up with over the time period. Like he definitely is our meme lord.
Awesome. Well, we're gonna close with X.AI. It's not completely Tesla related, but XAI will release its first AI to a select group in some important respects, it is the best that currently exists. So really, really exciting. But yeah, I don't know if there was any thoughts. And I know, again, we have a hard stop at 9, but we may be able to go a little bit past. But Jeff, I know you'll have to take off and stuff. But
no worries.
Well, the biggest thing here is, remember, this company was only announced in July. This has got to be one of the quickest turnarounds from forming a company to having a first look at what they've developed ever. And it's not an easy thing to develop. When you look at AI, we've talked about this many times before, the compute required, the expertise of the scientists, how hard they are to get, having that clear focus, deciding which way you're going to go in the design and training and everything else. It really shows the caliber of the team that Elon Musk has put together. And it's very exciting to me. And as we know, it is a completely separate company than Tesla, but Tesla does borrow engineers, they'll pay their salary, they'll do it as some type of consultancy gig from other companies. Tesla will certainly benefit from the fact that XAI is knocking it out of the park, clearly, when they just started.
Very exciting.
Yeah, no, I mean, that's probably one of the most later, Jeff. See ya.
Okay, everyone.
But yeah, I think that's probably one of the most exciting things about Tesla and really the Musk companies is that, again, I don't know exactly how they work out all of the financials, but you can never get bored, right? It's one of those things where if you want to work at Tesla, SpaceX, I mean, there's a lot of people that I've seen recently, SpaceX and X, or Tesla and X, but you can be the top talent in the US or in the world and go and work out some of the coolest companies. And I think especially right now, all of the, whenever I go to events and I meet some of the Tesla employees, they'll just drop the school that they're from. And you're talking the top engineers from the world, MITs, Harvards, and that doesn't necessarily give them, but it's just, it just goes to show not only how incredibly hard it is to get in, but, once you get in, you're able to potentially flex to these other companies and really stay in tune. But yeah, X.AI, it is pretty incredible just to see how much they're doing. And it'll be interesting to see also how it's integrated with X itself, and how they start, migrating the chat bot. They started doing things like whether it's community notes, which is partially, there's multiple, I believe AI included in that, and how they evaluate everything. And also two similar posts, it's just something underneath the posts that happen within Twitter that's AI based as well. So it'll be really cool to see how that happens. But any closing thoughts? Otherwise we can shut it down. But yeah, this was I know there's been a lot of people, especially headed into the holiday season. The stock has been taking a decent hit. And so it was really cool to level set on some of the EV adoption stuff, the FUD there, the Panasonic stuff, and then just level setting with some veterans at the beginning of this conversation. So hopefully that was helpful. Please patronize our hosts, Joe, Amy, and Jeff. Again, their information is in the post along with the description of YouTube if you're there. So please patronize them, and thank you both for being on this week.